Today is April 9th. It's the Wednesday, 2025. Hey, what can I say? We got a huge return in the stock market today. $3.5 trillion added in one day. The S&P 500, absolutely phenomenal. 10% in a day. Are you serious? You can expect to see a 12% return annually. So that, my friends, if you bought today at market open, it's a big deal. You made a lot of money. You're able to cash out, especially if you have options. If you had options today, hats off to you. So today I'll go over one of the stocks that I was eyeing all the way back since 2020. The company is Vale. It's an American-owned company. It's pretty much a cash cow. They're owned by Fidelity Investment Banking. So essentially, this is a sister company that they have on the side. This is sort of the side business. They don't really, they're not investing too much into it per se. The business essentially pays for itself and it brings in a shit ton of money. I mean, if you check this company's balance sheet, it's hard to keep your socks on. Um, so this company operates in Brazil, Canada, and Venezuela. So obviously imports to the U.S. The U.S. If we think about where we're at today, the U.S. wants to bring in production to the United States, especially steel companies, and they sort of want to make manufacturing in the U.S. with all products, pretty much, especially the steel industry, car industry. Obviously, electric vehicles require nickel, cobalt, uh, iron too, aluminum, and which company is going to supply that? Vale. The reason why I'm not really eyeing steel companies is because not only are they, I wouldn't necessarily call them overpriced. They're just not a good price right now. Vale is, however, sort of retracing back to my steps here. If you were to invest in a steel manufacturing company, what are you going to expect? A 1 to 2% return? Like you're going to double your money over the next few years? Yeah, okay, that's cool. That's cute. I'm looking to quadruple my money with the stock of Vale, and I'll show you how to do it exactly. Again, with Vale, it's an American-owned company. Obviously, they're going to have a lot of advantages when it comes to tariffs. Not that that's so important, but the fact is, it's an American-owned company. If we look at this from the major perspective, obviously they're going to have to import this raw material and ores, and the reason for that is because you can't efficiently mine um, these ores in America. It's going to cost you a shitload of money, and not that we have a lot of these ores anyways. The U.S. imports, I don't know the exact number, but they import a lot of raw material, specifically ores, from South America. So this is something to be very excited about here, Vale. Again, it's a sister company from Fidelity Investment Banking. Some things we know about this is that number one, they have a 15% dividend yield return each year. Yeah. 15%. And on top of your return, whatever you're going to get from buying the stock. So, I mean, that's very cool. I bought it here at a demand zone. If you look at sort of the technical analysis here, obviously on the monthly, the volume is very low. We're being underbought, not overbought. So that's a very good sign. So we can start heading to the upside. We enter this demand zone the monthly. I think it's a very important time frame. And it certainly holds a lot of merit here that we have a huge flag pattern on the monthly. We sort of broke out of here in 2020, exactly what I was saying. Well, they broke it. I should clarify. They struck a deal with Tesla in 2020, and sort of the stock just started rallying after that, especially with their huge dividend returns. So this is a stock to be very, very excited about. So on the monthly, now we're heading into another flag pattern, and we're looking to take this up to where I have my alert set right here. So say it breaks out here, we're looking to take it up here and look for it to sort of retest this level, and maybe it will come down, try to retest the flag pattern. It probably won't try to retest the demand zone here. That wouldn't be a really good sign because that would sort of invalidate the demand zone. So say it retests the previous structure point, which would probably be around here, and then we can make our way up here to $32. But of course, that is just speculation. We'll have to see when price reaches $22 a share, and it's at 886. I bought it at market open. I had my order set for 826. The order was filled at 815 a share. So this is pretty good right now. We get huge rejections from this area. Looking to take it up here. Let me know what you guys think. This is a big opportunity. 15% return on dividends annually. So even if this doesn't, go all the way in our intended direction, you're still collecting 15% a year, which is absolutely fine by